Hi, I'm Rick Kaler. Thanks for joining me. The two economic indicators suggest that the U.S. economy is recovering from the recession. The housing market is almost back to the levels it was at in 2006 in most areas of the country. We've also seen record highs in the stock market, like the Dow Jones and the S&P 500. Yet, according to a recent survey by Money Magazine, many people still feel anxious about their finances. They may be more optimistic about their own current circumstances, but they still worry about their future or about the economy in general. This continued anxiety, despite a rosier economic outlook, just may not seem very logical. But when you take a closer look, it makes perfect sense. For one thing, people who suffered job losses, foreclosures, or other financial setbacks during the recession haven't necessarily recovered emotionally, even if they've recovered economically. Just like other traumatic life experiences, painful financial experiences can leave a lasting emotional damage. Even those who weren't directly affected financially by the recession were affected emotionally by the alarming economic headlines. Our brains have evolved to react to threats with immediate action. So these news reports triggered a fearful urge to do something now. Unfortunately, some investors panicked and did something by selling out of the stock market right at the bottom. This may have reduced their anxiety in the short term, but it increased their anxiety in the long term as they wrestled with when to get back into the market. Many haven't gotten back in even as of this date. Even some who did nothing still experienced a lingering sense of anxiety and stress. Now that the news is better, though, why aren't we all over that angst? Well, for one thing, our brains don't respond to good economic news in the same immediate way they do to fear-inducing news. A headline like Dow Jones hits record high doesn't give our brains a jolt of happy hormones equal to the shot of fear we get from Dow hits new low. What we do relate to personally are changes that affect us directly, like cash in our pockets, a pay raise, or an observable increase in our purchasing power. Many people aren't necessarily seeing those effects right now. To illustrate this, two of the most significant economic indicators, the housing market and the stock market, don't affect the vast majority of us on a daily basis. Unless you are buying or selling a home, you don't really notice or care about real estate values. Gas, food, and consumer good prices affect the average household the most. The same is true for the stock market. Some 53% of Americans don't have any money invested in stocks at all. And even if you do, an increase in the overall value of your retirement account isn't likely to change your immediate cash flow. And if you haven't received a raise in several years or can't find a good job, your reaction to news of a record stock market high is likely to be, so what? Things still aren't that good for me. To reduce anxiety, then, what we really need is a change for the better in our personal circumstances. That change may be a tangible financial one, like finding a better job or getting a raise. It can also be a change in focus. You might opt to pay less attention to the things you can't control, like news reports about the economy. Don't expose your brain to information that feeds this fear or that you can do nothing about. Another option might be to focus on what you can do, building up an emergency fund, paying down debt, or cutting spending in order to contribute more to a retirement account. In that way, you can use anxiety in your favor. You can make it a motivator to improve your own financial situation. Thanks for joining me.